Welcome back to Bunnex Investment Group. This video is going to be solely for those who are about to give up their trading. You've tried to learn even our trading strategy, but you are finding it very difficult to understand. And I'm going to simplify as much as I can for you so that you can apply and get trades which have a higher probability of winning. So this basically is going to be mastering the simplest 3-day setup. You're not going to delve into several intrinsics that will be required for you to enter within cycles, but only at the end of cycles and only when there is 3 days of rise or drop. So I'm going to illustrate all this on USD against JPY, and we are going to speak of all the principles that are required for you to get an entry. So like in this case, we are going to start off from January 2024 down to right now, and you need to follow through each and every step that I will be taking so that you can be able to apply this for yourself. So I'm going to use the rectangles so that it will be easier for us to demarcate the days as well as demarcate the end of the cycles. In this particular case, we are going to start off from this particular point, which is the lowest point that is available to us. I have marked what we call a day of rise. A day is a period equivalent to these two black traces, but you can as well see these intersecting from the middle to the other middle of the next period. So from that point, we can see we had one and then we had another day, but this day actually broke the high of the previous day, meaning that we had the first day of rise, the second day of rise, and then in this case, we had a third day of rise that broke the high of the previous day. After 3 days of rise or drop, the underlying principle or the concept that we'll be following is to find a reversal. A reversal is seen by a double top or a double bottom, whereby we retest the end of the last level or the last day of rise. So this was the end of the last day of rise. We need to retest that particular point for us to get an entry. And when we are now retesting, we are now looking for a candlestick reversal pattern within this particular zone, right? You can see we retested it once, then twice, and the market went our direction. One could have entered at this inverted hammer, and you could have made your profit, which was actually equivalent to a 2-to-1 reward to risk ratio. So your trade was actually going to be at the end of our, or at the closure of our candlestick. This is where you were actually going to make an entry. Stop loss above structure, and you were going to enter like that. So we start again from there. We had a day of drop. This was the low of that particular day. Was that low broken? No, it was broken, but there were no 3 days in one direction. Therefore, there was no trade within that particular instance. So we had 1, 2, 3, 4, 5 days of waiting until we were proven that the market was not going to go in our direction. Then from there, we start again our count. We had the first day of rise. Was this a day of rise? No, no. And this was a day of rise that broke the high of the previous day. So we have the second day of rise. Then this was the last day of rise like that. Therefore, we had 3 days of rise in one particular direction. What now can we do? We said our entry will be a retest of the order block or a retest of the end of the last day of rise, right? So this could have been a missed entry because the market hardly touched the zone that we expect it to be. Therefore, this was actually going to be a good trade if this M pattern or this double top had satisfied what we are looking for. From there, we start again our count. So you have several pairs or several assets to look for this particular manner so that you won't be sitting on your hands whilst these consolidations are happening. If USD JPY is not setting up, probably Euro JPY is setting up, Euro USD is setting up, and so forth. So we start again. From this particular point, we can see there was a long period of consolidation from that point to that point. Then we had the first drop. First drop was actually this drop. Day of drop was issued. Another day of drop that broke the low was also issued. And then the third day of drop was issued, like that. So 3 days to the downside, and these actually gave us something like this. At the end of the third day, that is where we want to see a retest on the following days. Therefore, we had something like this. This was the end day, the end of the third day of drop, and we had a beautiful candlestick reversal pattern at this touch, or you can as well say at this particular touch. So our long entry, which was going to be our 2-to-1, was going to be like something like this, where we have our stop loss below structure, and our take profit should satisfy a 2-to-1 reward to risk ratio. Therefore, this was going to be our next entry. From that, we can start again to see that this was a day of rise to the upside, like that. A day of rise, right? From that day of rise, this was consolidation, and we broke on this particular day of rise. We need to see clearly the breaking of the highs, right? The high, we need to break that particular high. A high was also broken on this particular day, right? This was the particular day where a high was broken. So we had this rise. After that, we were expecting to see a pullback to the downside, but unfortunately the market went to the upside. We call this extension of level 3 or extension of day 3. And when they extend, what we wait for is to see a pullback to the end of that extension. If we were going to say this was the end, we woke up the following day seeing that the market extended. On the extension, we actually mark the high of the end of the day 3 movement or day 3 flow. So after that, we can see the market actually came back to retest here. Our short trade was actually going to be entered on this particular day, and we've said stop loss above structure, and we need at least 2-to-1 reward to risk ratio. So this became actually a very long trade, and in this particular instance, it failed to hit our target. The most it went was actually at this particular point, and later it went and closed off at break even. So we say whenever you have moved at least 1 hour in your direction, you would need to actually move your stop loss to entry so that you protect your account. From there, we can start again the count. We can see there's day 1, day 2, and day 3 is actually in play. What is going to come next is now your assignment. Do not sleep on this particular strategy. It will actually restore your confidence with trading. And as always, do not give up on this business. It is your route to financial freedom. See you on the next one.